Listeners, we are going to get to intros in a little bit, but before we do that, I am sitting here talking with Andrea Barnes. And Andrea, I want you to tell us something that you believe about passive investing that might surprise us.
Well, I think maybe the most surprising thing is that you've been told your whole life that other people should be managing your money for you, and that just leave it to the experts, and that's the way that you are able to invest and grow your future. And what I found as soon as I started moving into the passive income space, that the closer I got into relationship with my money, the better off we did, the faster our wealth grew. And so I would say that I am more actively involved as a relationship with the way that our money is working through passive investing than I ever have been before.
I can't wait to get into this today with you, Andrea. Listeners, welcome to the Source of Commercial Real Estate, where we talk to the experts in non residential commercial real estate so you can grow your business, find a competitive advantage, and use real estate to live the life that you want. I am your host, Jonathan Hayek. I'm a former public school teacher who found financial freedom through residential real estate investing, and now I invest in commercial properties, particularly small industrial. Today, we're talking with Andrea Barnes. Andrea is a seasoned real estate investor with a national portfolio of single family homes and multifamily projects. She and her husband, Kevin, manage a multi-million dollar portfolio, which has grown to include a broad range of passive investment vehicles, including multifamily, energy, debt, funds, and for ground up developments. She's a passionate learner and has taken a deep dive into learning tax strategies and legal strategies, personally meeting sponsors and other investors, and boosting the financial growth trajectory of others through her own consulting company, Bloom Wealth Coaching, and a variety of masterminds. Andrea, I am thrilled to talk with you today. How are you doing?
Oh, I am so happy to be on this program with you. I hope that whatever my story has to share is helpful to people. You and I met a couple of weeks ago, and I'm just so grateful that you invited me to be with you today.
Andrea, let's start with why don't you tell us a little bit more about your background, how you got started in real estate, and what your work in real estate looks like today?
Okay. So I actually am a nonprofit executive, and I have been involved in the nonprofit space for about 35 years. So it's kind of fun to hear that you also started in that kind of work as a teacher. What I specialized in was being either the executive director or the fundraiser. So across my 35-year career, I raised over $52 million for a variety of causes, and was very fortunate to have a strong partner in my husband Kevin, and he was an engineer in the defense industry. So really, we were just W-2 employees, and I remember that I was a little bit worried about retirement because in the nonprofit space, only 17 out of those 35 years were 401k plans offered. And so when I had those plans available, I was a really diligent saver. And I took advantage of the employer match and all of those kinds of things. And unfortunately, just along with everybody else during the real estate crash in 2008, my 401k lost one third of its value. And I was nearing 50 years old at the time. And so we were, and my husband's also was way, way down. So when we were looking at where we were at the age of 50, we got scared and just felt like we are not going to be prepared in 10 years or plus years to be able to retire. I happened to have an orphan 401k at the time because I had left the job where I had most recently had my 401k. And I got introduced to the idea of investing in single family homes. My nephew, newly minted with an MBA, had just been at my house for dinner and told me that they were working on buying their third house. And I remember them saying, "Oh, and we're going to probably be looking for a money partner." And after they left, I looked at my husband. I said, "Well, we could probably be a money partner. That would be really interesting to do." So my nephew introduced me to the group who had helped him buy his first couple of houses. And I got really, really excited about the possibility. Of course, we had just had a huge real estate crash. There were some markets that had been hit much, much worse than others. And one of the things that happened to me is I could not understand what made my 401k go up or down. It just seemed like that there were these market forces that I certainly couldn't control. And there was nothing I could do to change the trajectory of it. But I could understand real estate. I could understand that there were houses that, particularly in Arizona and Las Vegas at the time, that were sitting in the desert. They had been foreclosed on. They were there were problems with the neighborhood because so many houses had been foreclosed on. And I could understand how if I went in and purchased a home, I could fix up the home, preserve it in the neighborhood, improve the neighborhood, provide a safe, comfortable place for people to live. That was a story I could wrap my head around. And so we actually jumped in full force. We took my orphan 401k and put it into a self-directed IRA. And then we also took out a home equity line of credit. And between those two, we were able to buy 6 houses. So that was our jump. And we did it through a coaching group. And I really felt comfortable with their level of expertise. And they really helped us do all of it. And so I learned all of the ins and outs of how you manage a single family home portfolio, what you need to do to not get into trouble, but to make sure that you're always on top of it financially, and, making sure you have cash reserves and all of those kinds of things. So just across the years, we just let those little houses just do their thing. And every so often we would refinance a house, or we would sell a house, and then we would 1031 exchange, which is just a tax advantage way of purchasing additional properties without having a tax event in the event of a sale. And we, across a decade, were able to buy a total of 24 houses. And at the height of our owned portfolio, we had about 18 houses, and that was in 2022. And I would just say those little single family homes completely changed our life. We 3x'd our investment wealth from, I'm sorry, not 3, 10. We 10x'd our investment wealth in the course of that decade. And so I'm a huge, huge fan of real estate investing.
Andrea, will you take me back to that conversation that you had with your nephew? That to me seems like a pivotal moment in your investing career and maybe your life. Will you tell me about why? Because I have lots of conversations with family members and friends who are of your generation, and I talk to them about real estate investing, and they hear what I'm doing and they say, they put it off and they're just like, oh, that's, good for you. I can't do that. What was it about that conversation that gave you hope or confidence or the belief that you too could start investing in real estate?
Well, I was really impressed with this young couple and the fact that they had already started the machinery to get their third investment house. That was really impressive. I have always loved real estate. I mean, I remember going to a Robert Allen Nothing Down seminar in my 20s, and so it had always been intriguing to me, but I had never known how to do it. So I think I was receptive to it. I honestly, part of it was that I thought it was going to be one house, and I thought we were going to go in as a partnership. I mean, that was a low bar to cross for me. I think that the thing that really surprised me most is that we didn't do one house, but we completely ended up reconfiguring our entire financial life to go all in all at once. And I think that was probably the biggest surprise. But what had happened is we had met with the owner of this coaching group, and they really were almost a concierge style group. They found the houses, they got them off the auction blocks, they had ways to fix up the houses, they had property managers that they introduced you to, they had a strategy, they did intensive workshops to teach us how to do it. So it felt like because I knew my nephew had had success, and then going in and seeing what their process was like and the just the economics of it, that it felt prudent to do. Almost it would have been imprudent not to do it, the way that I understood it at the time. And so it does seem really dramatic what we did, but it was something that made sense to me, like complete sense. And also, we were empty nesters, and so we weren't actively raising our two daughters anymore. And so I actually had a lot of intellectual energy that was freed up to start to apply to this project. So it was a really good project for me to manage as well.
What was the name of the coaching group or mastermind that you were a part of?
Well, it's gone through a couple of name changes, but what it's called right now is Done for You Real Estate,
Okay.
and
I've
they
recently
really have been terrific. I
I
still work with
recently interviewed Zach Lemaster. He's the founder of Rent to Retirement. Sounds like a similar organization, kind of turnkey investing. But typically, when I think of turnkey investing, it's like you don't have any equity in it. You're buying at the top of the market kind of thing. But my conversation with him and now talking with you tells me that that's not necessarily true. That it can be turnkey and you can be a part of these groups and they're still going to make some money, but you can still potentially buy some single family properties with some meat on the bone and some equity.
Well, one of the things that I mean, I just honestly, I will say that some of my success has a lot to do with the time that we went into the market, because we went in when the prices were, I mean, we literally bought those six houses for 30 cents on the dollar. um, and we used leverage to get in. We did full price deposits, I mean, you know, uh, down payments, and had just standard loans on them. But that small, it was so small because the houses had fallen in value so much that we were able to control a lot of real estate for not too much money, and we were able to buy at discounted rates. And so 2012, 2015, we bought again in 2018. I would say it started to get more real uh, standard pricing in the 20s. And so we bought our last houses in 2022 to date. So we've been buying all along. And you're right. I mean, it is kind of a premium service to have someone who helps you find the houses, help you, manage your relationship with your property manager and all of those kinds of things. But honestly, it helped a busy professionals. Both Kevin and I were working full time. It just made it possible for us to transact all of this real estate and then run it in a very passive way. And so it didn't, maybe it took 5 to 10 hours a month at the most to work on them at that time. And so, yeah, I mean, it was a fantastic way. There are so many more ways now, and there are so many resources now, and I've studied a lot more. And so I love that group, and I still work with them. I was just on the phone with them yesterday. But I also know that there are so many ways for people to get in a different way than we did, but still be very successful today. You don't have to just rely on the crash of 2008.
Take me back to when you were considering that first deal. It sounded like maybe it was a partnership with your nephew. What were your expectations at that time? I imagine, where you are now was probably not in your wildest imagination. So at that point, what were your expectations and what were you hoping to get out of real estate? Were you imagining that it was going to be your keys to retirement back then?
Well, because he introduced me to the group, I went past that so fast, about the idea of what the one deal with him would have been like. But what I would say is that both my husband and I went in, and the group did what they called a game plan for us, where they could say, okay, this is what you could reasonably expect to see happen with your real estate. So they built out a scenario for us. And I remember my husband saying, well, what I would really like to do is be able to retire on $10,000 a month. And so then they just showed us, well, this is what it would look like to take it, this is what it would take for you to be able to do that. But this is why it's extremely doable and realistic. And once we saw that, and then we had gone through all of their intensive training, it was very compelling. At first I had no idea that it was going to help us retire, and then I had full faith and belief that it was going to help us retire, and then it turned out to be beyond our wildest dreams. And I know that, again, we were lucky because of the time that we got into the market, but we really put our heads down and did everything we could do to make it successful and to keep the money moving as fast as we could, so we didn't have lazy equity and we were always redeploying to get to that big portfolio that we had.
So, Andrea, you were the recipient of a significant amount of equity buildup over the last decade plus. And I know your investing strategy has changed a little bit over the last few years. So, will you continue to take us through the evolution of your investing? It sounds like you do still own some of those single family properties. It sounds like maybe you've sold some of them off. So, will you tell me about your strategy and what you're doing with that capital now?
Yes, thank you. After we had just purchased 6 houses in 2022, which was the pinnacle of our home buying journey, we actually realized it was possible for us to retire. And so even though all of our houses were cash flowing, they weren't cash flowing enough where we felt like we could take a steady income from it. The maintenance expenses are just expensive. And, we had 5 houses in Florida, and they all at some point or another have fallen victim to big storms. And so we just knew that maintenance was expensive. And so we just knew that if we wanted to retire and we wanted to have income, that there was probably needing to be a different strategy. And honestly, up until that point, I didn't even know that there was a different strategy. And I started finding out about commercial real estate and other aspects of investing in Main Street that were available to us and that had strong passive income, and also other strategies that had big equity growth options, that I just started to crash course. And so I would say I started probably my education on that in 2021. And I did it mostly to begin with through podcasts. And I would listen to a podcast and I would hear somebody interviewed, and then I would listen to their podcast, and I would just start to snowball the amount of resources and experts and people who were doing deals and people who were investing in deals, and really learning that way. I got involved in a lot of masterminds or think groups, or started reading a lot of books. And so I probably, over the course of our investing career, had put in about 8,000 hours from, a decade ago through now in passive investing. And so knowing that, we just started to sell off a few of our houses, and then we started redeploying that money into multifamily homes to begin with. And so we had one that had gone full cycle in 2021, and then reinvested that one. And then we are in 2 additional multifamily. And then I just started learning about other assets. And so I really like debt or debt related or fund oriented assets because they're good for cash flow. And then, ground up development is a bigger gamble because you have your money in longer, but there's a opportunity for a much bigger multiple. And so I like the idea of being able to grow our money into the future. And then some that are mixed, where you get a little bit of cash flow and a little bit of upside as well. And then I'd never, ever been interested in taxes, but I realized that taxes were one of the biggest eroders of wealth. And so now I've become fascinated with taxes. And I've worked really, really hard to learn how to use our real estate to also take advantage of the tax code.
Andrea, it sounds to me like you went through a period of really evaluating your portfolio. You had built up to almost 24 single family homes, and you decided that at some point it was time to start selling those. So, there's some, we all know that there are these expenses that come. The furnace goes out, and your home's in Florida. We're victims of some storms. And so will you talk about your thought process, sort of if there were metrics or just a rule of thumb, or how did you think about, you had a given property and you knew it was bringing in a certain amount of cash flow, but then you also knew it had a certain amount of equity. So talk to me about your thought process for how did you decide that this property was the right one to sell?
Well, sometimes what I decided is that everything that was inside of my self-directed IRA, that we were going to move those into other kinds of assets. And so those were the first ones that we put into the sale pool. I'm still working on two of those. So three of them have been sold, and two of them are actually on the market right now. And so, and so that was probably the easiest decision. They had the most equity in them at the time, and so we had the biggest bang for the buck when we sold them, and we're able to redeploy the money. And so, and then the other ones that we have decided to sell. Well, they all had huge run-ups, in the 2000s to 2022, and so we just started looking carefully, like which ones should we sell, why, and then why would we sell them? But most of them had matured enough that the equity was the reason why we wanted to sell them and to deploy them into other areas.
Was there a certain amount of equity that you identified as the key indicator of when to sell? Like when you had $100,000 of equity in a home, was that the time to sell, or was it like a return on equity calculation when it dips below 8% or something like that? Were there any metrics like that you used?
Well, that's interesting that you asked about the 100,000. I would say all of them were over $100,000 in profit at the time, and you also have to understand that a lot of them had already bought other houses and still returned that at the end, and so that was some of the consideration. And we had only ever sold a house and done a 1031 exchange, and so when we were deploying them into other kinds of deals, we had to face the facts that we were going to trigger some pretty big tax events. And so then we've now looked at all of that, and then we're working on our strategies tax wise, like what can we do to offset some of those gains so that we can keep the bulk of it, so that we can continue to grow that portfolio in
Yeah.
different ways.
Yeah, I mean, there's so many different ways of looking at this, and this is the the blessing and the curse of buying great deals, or buying deals that eventually get a lot of equity, is that your return eventually goes down, because as the equity builds up so high. So if you had $100,000 of equity in a $300,000 house, it's probably not cash flowing enough to justify keeping all of that equity in there. And so, a lot of people like to say, keep real estate long term, just hold it long term. But when you buy great deals, it brings your returns down because you have all this equity sitting in there. And so it's a blessing and a curse. It's a conundrum that value add investors go through, and everyone has a different way of looking at it. Whether it's a certain amount of equity that they want $100,000 or more, before they sell it, or in my case, I really value the return on equity metric, and so I really consider how much would this sell for on the open market. How much do I owe on it? So what's my equity? What's my cash flow? And then getting a metric out of that. And if it falls below a certain amount, then I seriously consider selling off that property. So Andrea, I'd love to ask you more about passive investing. And it sounds like your goal is to do more passive investing. It sounds like there is potential for more sales of properties in your future. And so you're going to be sitting on even more capital that you'd like to invest passively. Can you tell us about some of the advantages of passive investing and describe the passive investing lifestyle that you have?
Okay. Well, I will say that we successfully retired about 15 months ago. My husband and I both retired on January 31st, 2023. He retired at 11 in the morning and I retired at 3 o'clock in the afternoon. And so that was very, very exciting. So we successfully hit our goal of being able to do that. At first, I was so taken by the complete change in our wealth and our ability to have gone from being really really in trouble to being really well situated in a matter of a decade. And so I felt like, one, I had a big stewardship role to play with this wealth that had been created. And so I have been working on developing an investment philosophy and sort of a what we're going to do. And so we're concentrating on two things. One is our current lifestyle, and the second is our legacy, our long-term legacy. And we're young. We were able to retire in our early 60s, and we're healthy and we like adventure. And so some of what I'm working on is getting our passive income high enough that we can say yes a lot. I love the idea of being able to travel, and we ski and we golf and we just have fun. But we know that just by doing it by ourselves is not as much fun as it could be as if we could bring our family along with us. And so we just want to be able to say yes as much as we can to enjoy and develop those relationships with our grandchildren, with our daughters and their husbands. And so that is definitely an area, and it does take some time. And so reallocating your resources to get them into cash flowing, it just takes time. And so that's a process that we're going through right now. And then knowing that we had 10x'd our original investment to before we retired, I just think if we can't do that again, we're not trying very hard. So that's a goal of mine, is to just keep building that and to keep, taking advantage of compounding cycles. And so where we can double our money in each cycle that we have invested. And so if I would say why I like passive investing is because there's a business plan. When you meet somebody who is, investing in as you like do in industrial or in self-storage or in multifamily homes or in car washes, for example, all of those things have business plans, and they have a timetable. They have pro formas where they've looked at the expenses, they've looked at the economics in an area. And does everything go according to that business plan? No, it doesn't necessarily, but it does give you a roadmap to say, this is how I can see my money working for me, and it can go through this compound cycle in a particular way. And so while the stock market will go up and down and there's not anything I can do about it, I feel like I have more control over the outcome of the dollars that I put in by doing my homework and being in relationship with the sponsors, so that I can understand what the investment is and then make that decision to invest in it. And so that's really what our goal is to make sure that we're in really good investments that we've done strong due diligence on, so that we have a roadmap for how it's going to increase in value.
So let's talk about some of those really good passive investments that you're involved in. Talk about some of the requirements, or what gets you interested in a particular passive investment. Are you looking for cash flow or upside, or an operator with a specific mission, or an operator with a certain amount of experience? What sorts of things get your attention and get you excited about a passive investment?
Well, so I definitely have goals, and so it depends on like which which bucket I'm investing for. So one of the things that we've been working on is some things that require a lot of tax planning. So we're trying to move a lot of what happened inside of our qualified retirement plans into Roth IRAs because they already have grown so much and we don't want them to continue to grow in the qualified plan. We'd rather have them grow in the Roth. So you have to have strategies about how you're going to move that. So sometimes the investment that we make is a strategy around how can we most tax efficiently move the money over. So that would be one thing, and so I always have my ear to the ground to find out how I can best do that. And so finding opportunities that maybe would give us a tax advantage to move the money over, I certainly would be looking at that. So tax advantage would be one thing that would really perk up my attention. Another thing would be so if it's in the lifestyle bucket, I definitely would be looking at what generates cash flow, but then also gives me a bit of an equity bump at the end. So it's not just cash flow, but it would help us grow that corpus of investment so that it can continue to, match inflation in the future. So that's what I would be looking for in the cash flow side, and then on the equity growth side. Um, that's we're in these four ground up developments. And I would say that those I think are our most aggressive um, investments because they take the very longest for money to come back to you. They're very attractive because they have a high multiple, but you have to be real careful not to have too much money in that bucket because it just turns out that that's a really long time to wait and to see what's happening. And so you're sitting there looking at your dollars in there and they just sort of stay the same for a really, really long time. And so you, I kind of put those into kind of a category of how much money is going to be in this most aggressive bucket. And then in terms of the expertise of the sponsor, um, I'm getting better at understanding how to do due diligence, and so experience is very important to me. Handling difficult situations when they've been faced with them, and the way that they've done their investments, and their projects. Communication is really important to me, and we haven't found the perfect communicators in all of our investments, but when they're good at communicating, it is so appreciated. You just hate being left in the dark about what's happening and what's the next step or what's the next movement. And so because once you're a passive investor, you don't really have a huge amount of say in what happens on the day-to-day management. You just don't. And so but what's helpful is just to know what's going on and what the challenges are, what the successes are, and then how on plan are we against the pro forma. Like if it's bad news, tell me. If it's good news, tell me. That's really important to me. And then why things click. It's really interesting. I don't know exactly why. I think it's because like I have these slots and all of a sudden one will make sense. Like I sold something outside of the 1031 exchange. I knew I had a tax issue. I found an opportunity zone investment. That one fit the slot, so that would be it's funny how that all works for when the money becomes available and then what slot needs to be filled.
Andrea, will you think about the last couple investments or operators that you said no to? What were some of the top factors that caused you to say no to a particular opportunity?
Uh, the most recent one was a multifamily home. It's a recent acquaintance that I'd made. I really love what she's about. I love what she's up to. Definitely wanted to listen to what the opportunity was with an open heart. And I had money that was available, but the the thing that ended up being the most important for me was I found an opportunity that helped us with a tax strategy to move money over from our Roth, from our qualified plan to our Roth, and that took precedence. So that was a no.
Okay, so it wasn't anything about that particular operator, but maybe if that operator would have had uh, some strategy to help you with your taxes, then it could have been a yes for her.
Definitely investing in a multifamily apartment does still bring with you great tax advantages. And so, um, in that case, I might have done that, but this one was just so much stronger for what my actual need was that it outweighed it.
Are there any other red flags? You and I were, we met at the Best Ever conference a few weeks ago, and there are people left and right trying to raise capital for deals and funds and different opportunities. And so when you talk to these people, and I'm sure they meet someone like you who's a professional passive investor, they get big eyes and they say, "Oh, let me tell you about this opportunity." What are some of the red flags or immediate no's that when you hear about an opportunity, it's just an immediate or maybe an eventual no, whether it's the operator or location or asset class type or anything like that? What's a no for you?
Well, I think we're in an important time right now, which is this very high interest rate environment. And, there's a lot of deals that have been out, you know, in process, going through the business plan that have been negatively affected by that environment. And so, what I noticed is that there were some operators who had created new equity funds where they were raising more money, and some of it was to shore up their current deals, and then some of it was to also go in and help other people with their deals. And that honestly, that one didn't appeal to me. That didn't appeal to me. I thought um, I could completely understand why that has happened. I actually have been through a capital call with one of my investments. I know this environment has hit a lot of these deals hard. But maybe because of that, that made me less interested in that kind of a deal.
What's it like being a part of a deal where the operators come back to you asking for more money?
Well, that was a surprise. Well, I didn't, when the very first time we got involved in doing this work, I did not know about capital calls. And so I was not as well informed as I needed to be. And honestly, I learned about capital calls through my ongoing continuing education in this space. And so I think everybody needs to know that that's a possibility. So they had done a very good job of explaining the case and where the problems occurred. And it was, and we had two properties with them, two investments with them. One of their properties has gone really, really well, and the second one was having problems. And this partner that they were using to do this value add had been doing both projects, and one of them they did well, and one of them they didn't do well, and they had to make an adjustment for it. So I could see that some of it was going well, and then I could understand what their concerns were on the other side. Um, they Anyway, I felt like they did a good job explaining it and why that they could still stay on the business plan and they could still succeed and they could still execute it. And it wasn't a gigantic amount of money on our part, and so we decided to go in and say yes.
Do you know if that operator was successful in raising the total amount that they wanted to?
They did. They did, but
Good.
I definitely know some that don't, and they are creating these equity funds where you are going to lose part of the value of your share.
Andrea, will you speak to other people out there listening? Maybe they're 50 years old, maybe they're younger, maybe they're older, and they're concerned about retirement. Maybe they have a 401k or another retirement account. They don't understand it. Maybe it's not, the balance isn't as high as they would like it to be. And they're starting to get concerned about retirement. They're considering real estate. They've heard about real estate. They know that there's opportunities in it. What advice would you have for people in same position as you 10 or 12 years ago, that are reluctant to make these sorts of transitions?
So I would say that investing in real estate profoundly changed our lives. And it will change the lives of our children, and it will change the lives of our grandchildren. And I am just wildly enthusiastic about our journey. And in fact, when you introduced me as having a coaching company, it's it's the reason why I'm doing it is because it's hard to find out how to do this business. I mean, I was looking hard and I knew nothing about it. And and so I would say that the first thing that people need to do is to really take ownership of their own money. Like take ownership for the growth of your money, the trajectory of it, your understanding of how wealth is created and how you can safely and securely move that path forward for yourself. A lot of people feel stuck because they are in company plans and they don't have a way of getting that money out. And I don't know if all plans do this, and I'm going to guess that not all of them do. And some of them will only do it in certain circumstances. But we did find out that my husband, while he was still working, and it was for a big national defense company, that there is a way to do something called an in-service transfer. And we were able to take out 50% of his money from his company's 401k plan 9 months before we retired. We got it out of the market and started working on passive investing right away. And so I would say that's an interesting question to ask yourself is can I do that? So like, is it even possible for me to get my money out of my 401k? In-service transfer, that's the magic word. It was a phenomenal find to know that there was that possibility for us. Um, and then the second thing is to start doing homework. You have to educate yourself on what's possible. And I was listening to, or I was reading Tony Robbins' money mastery book, and he talks about like the most sure way for you to grow your wealth is to even you can be in kind of modest returns, but that it is steady and it keeps going up, and you don't have down years. And you know, the stock market probably 4 out of the 10 years will have a down year, and you're losing money in it. And we actually got hit with a down year the year before we were going to retire, and and my husband's plan lost a significant amount of money that year. That's why I was so anxious to get it out, and because it was really hard to put it on the sidelines. And anyway, so I think that that's what makes investing in real estate so attractive. And it's because if you find the right partner where there's a business plan that can be executed and you have faith in both all the numbers and the stories behind the investment and then the person who's going to execute on the investment, you have such a much better chance, in my opinion, of keeping the ball rolling in an upward um, well, that doesn't make sense, but keeping your money growing in an upward trajectory without bends and dips as much as you would be in the public markets. Um, Sometimes you get a spectacular year in the public markets, but sometimes you get a big loss too. And so that's really why I love being in Main Street investing rather than Wall Street investing.
Andrea, as you look back at the beginning of your journey, investing in those single family homes 10 or 12 years ago, looking back, are there any changes that you would have made with the knowledge that you have now? Would you have done anything differently, or would you advise other people to do something different than what you did?
I mean, I think the thing that makes the single family home so extraordinary as a way to get started is one, it's a low barrier to entry. Anybody can do it. You do not have to have $1 million in assets, as you do in a lot of this commercial passive investing where you're an accredited investor. You don't have to do that. You can do it on your own. And you can do it in so many ways now, right? You can go in and live in the home and have a 5 to a 10% down payment rather than like me, where I had to have a 20 to a 25% down payment. You use leverage. I mean, that's probably the most magical aspect of it, is that the bank loans you 80% of the money and you get 100% of the upside and all of the tax advantages. So I think single family homes are just an amazing entry point for people to get into investing, and very quickly, if you can stay disciplined, is a way for you to build $1 million in a portfolio. You can do it fast. And so if I could do it differently, um, I mean, you can only learn what you can learn at the time, and so you only know what you know, and then later you know more. Um, I think I would have tried to put more of our own personal money to continue to put it back into the real estate. But what we did is we really let the real estate buy all of the other real estate, so we could have accelerated our trajectory faster. And that's probably, oh, and I probably would have gotten home warranties for all of our houses, because sometimes the maintenance is what killed any of your cash flow. And I think home warranties could have flattened that expense out a little bit more.
Andrea, you and your story are such an inspiration, even to someone like me. I love what real estate has done for you, and it's given you this amazing life, and you've been able to use real estate to create this life that you didn't really think was possible. And you were 50 years old, and you weren't sure what the retirement plan was going to be. And look at you now, and it seems like you're only just getting started. Your thirst for knowledge and information, and your continuation of learning is so inspirational. And I just think you're gonna continue going upward really quickly. Is there anything that we haven't talked about with your story, with passive investing, that you'd like to share?
I would say that people who are successful in passive investing find themselves not, you can't do it by yourself. You really do need a team ultimately. And so on my team, I have an accountant, I have a tax advisor and somebody who helped us put corporate structures around our real estate. We have property managers, we have mortgage brokers that we've worked with. And so in some ways, it feels like you're doing this by yourself, but really you are doing it with a group of people who are supporting you. You're contributing directly to the well-being of the communities where you are investing. It's just so evident on the ground what a difference this kind of an investment makes. So it's very personally meaningful to me. And we've started to bring our kids into it. They're young moms, and we want them to start to learn what we're doing so that they can be part of our business and helping us to shape our legacy, because it's going to affect them, it's going to affect their kids. And so it's just it's a whole new way of being in relationship with your money that is just really powerful. And so I just love helping people along on that journey, because it's really profound what a difference it's made in our life.
Andrea, if listeners want to connect with you or learn more about you, where would you like to send people to?
Well, so I have maybe two places that people could go to. So on LinkedIn, my profile is Andrea H. Barnes. And then I also have just finished creating my website. It's bloomwealthcoaching.com. And if anyone lives in the Utah area and wants to learn more about doing single family home investing, we're creating a day-long seminar called Real Estate Investing Intensive, and it's coming up on June 14th. And that's on that bloomwealthcoaching.com website.
Amazing. Andrea, you're a huge inspiration. Thank you so much for joining me today.
Thank you so much, Jonathan. I really appreciate it.
Listeners, if you enjoyed this conversation, please feel free to reach out to either one of us. We love talking about real estate, and we would love to connect with you. Thank you so much for listening. Until next time, take care.